Silver right now is so undervalued. It almost doesn't make sense.
Silver and gold are safe haven investments. Many of us put our money into the precious metals to protect ourselves against things like hyperinflation, economic doom. But what about our houses? What about residential real estate? Many of us look at that as well as a way to protect ourselves. Today, we're joined by our friend Brian from Mountain Bullion Entertainment. We're going to talk about residential real estate and what's going on in that market. Will it protect us from economic calamity, hyperinflation? Brian, welcome back to Ron's Basement.
Hello, Ron. Thank you for having me back in the basement. It's an honor to be here with you today, and it's my pleasure.
Well, it's our honor to have you as well. So I'm sitting here in my basement of my house. Am I sitting in a safe haven asset? Any thoughts on what might be coming down the road for the real value of residential real estate?
Yeah, unfortunately, it's looking like there's a lot of warning signs. We're going to have a downturn in the housing market. Some folks are calling it housing crash, and I think in some areas it will be at that level. All the different areas will probably behave differently. So some might be affected more than others. Right now, the mortgage rates are the highest they have been in 23 years. On top of that, of course, we have very high interest rates, and it's just a very unaffordable housing market for people who are looking to park their money in housing as a safe haven asset as opposed to the precious metals. They say
You
that
know,
in
go ahead. Go ahead.
sorry, they say that in October, the amount of home sales dropped to the lowest level since the Great Recession. And right now, the new home listings are rising faster than demand. So we're kind of seeing this divergence as the inventory just now is starting to pile up. And the price cuts have already started in several areas, most of them being in the Western United States.
Yeah, I think it's important to point out not only are mortgage rates higher, which makes owning a home, if you need to borrow money, much more expensive, but the actual price of the homes have gone up as well. I like to use the example, I live in a upper middle class area of St. Louis, and we've not had these astronomical price increases, but I can tell you that 3 years ago, the average house in my neighborhood would sell for about 300,000. Now, those same houses are selling for $500,000. So, a person who 3 years ago bought the house for 300,000 with a 3% mortgage, compared to the person today who wants to buy that exact same house, but now it costs them 500,000. But as an extra added bonus Bidenomics kicker, they're going to have an 8% mortgage rate. The monthly payment on the same house compared to 3 years ago is at least twice as high and could be as much as three times as high. I mean, because when we talk about these mortgage rates that we hear too, those are for people with really good credit. And there's fewer and fewer people in the United States with really great credit. So it's a big, big problem right now.
Absolutely. And that's a really good point. The advertised rates, a lot of times people aren't going to get those. A lot of people right now are over 8% on just their interest rate. And
Yeah.
The price increase that you're talking about is so big. We are looking at the biggest housing bubble of all time in the United States, even when you adjust it for inflation. The
Mm-hmm.
rate of price increases is just off the charts. And so there will be some correction in regards to that. Housing right now is just unaffordable for most
Yeah.
people.
Yeah.
And so go ahead.
Oh, I was going to say when I think about the, let's say, physical silver that I own, and I also think about my house because I own this house, and I have an idea, what it would if I sold it today, or maybe it sold it a month ago, because I think the market's turning already. I feel much more comfortable with the value that I have in silver as opposed to what I consider the value of what I have in my house. That silver is positioned much more favorably right now than the value of the house at the quote unquote current market price. Does that make sense? If you're looking to buy gold, silver, or platinum, do yourself a favor and check out Pimbex, the online precious metals bullion dealer and sponsor of Ron's Basement. I was a happy customer before they offered to support the channel. You'll find they have the best prices, quality, and service. I think Pimbex is best, and you will too. And be sure to tell them that you're from Ron's Basement.
And that's a really good point to bring up. Silver right now is so undervalued. It almost doesn't make sense. And a lot of that has to do with what's going on at the COMEX,
Sure.
with these big bankers like JP Morgan. So silver right now is, it's just dragging along at basically the lowest price it can, whereas housing is really set to lose some of that overinflated value. Right now, there is more housing inventory than there was last year at the same time, 6% more. But what the kicker for that one is a lot of these big multifamily structures are going to be coming on the market over the next few months. And of course, winter is typically time of year when we see a downtrend in pricing anyway. So as this inventory starts to pile up with these higher interest rates and these higher prices, it's going to put a lot of downward pressure on the price of housing. And it is something where, for your comparison, if you're sitting on silver right now, it has a lot of upside potential. Property right now is most likely going to be losing value over the next year or two.
Yeah, boy, I tell you what, Brian, I almost abruptly ended this interview because I couldn't believe you said something derogatory about the COMEX. Those guys at the COMEX go in there every day, and their number one priority is to determine a fair price for silver and gold and all the other commodities that they trade. So I just wanted to set that straight.
Yeah, they're such honorable folks over there. Just helping the fair market value of the metals shine through.
Absolutely, that's the case. We'd like to thank Art. No, anyway, the other thing that you brought up, which is a great point, and I didn't think about this, and I'm sure the viewers, I hope they caught this as well. When you look at the value of residential real estate and you compare that to the value of, let's say, silver, silver is one of the most undervalued assets in the world right now, whereas residential real estate, I think the argument can be made, is one of the most overvalued assets in the world right now. Now, in terms of looking at your house still as a store of value, or a hedge against, oncoming calamity, whatever, I'm not saying a house is a real asset. It will retain some level of value, and it does have that benefit that it is a real asset. It's not, paper, unicorn, fart dust, paper, fiat money, or anything like that. So it is going to retain some level of value. But when you compare the two right now, you've got one of the most overvalued assets in residential real estate and one of the most under. So I'm thinking the idea is that I sell my house and and buy silver and live in a very heavy trailer for the next couple of years.
Well, some of the people who sold at the peak, that are kind of on the sidelines right now, renting. I'm not sure if they parked their money in silver, but they'd probably be counting their blessings here in 4 or 5 years had they made that move. Because I think the way that you put that was really good. It's so overvalued right now. And, you're looking at one safe haven asset that's going to be going up in value and another one that's going to be going down.
Yeah. They sold their house and maybe they'll be able to buy that condo for 75 ounces of silver in the future. Something else that I like to point out, and I want to get your thoughts on this as well, as we look at the construction industry, right? And it's a pipeline, right? You talked about that pipeline kind of, we got a lot of new inventory coming on the market in a couple of years. If you take a step back in that pipeline, the company Caterpillar, about 4 weeks ago, had their earnings release, and they painted a not too rosy picture in terms of their order flow, in terms of, who's ordering this big earth moving equipment. And maybe I dive in too deep and try to see too many forests through too many trees, but what that told me was, the beginning phase of any new construction project is earth moving, right? That's the first
Right.
thing that has to be done. And if Caterpillar's throwing up a red flag saying, hey, our order flow is going down, I think that tells us that whole industry could be moving into kind of a period of contraction.
That's a really good point, and I'm glad that you brought that up. Because so Caterpillar is already seeing that at the very first stage of construction for these big projects. And yeah, that I think that's a smart thing to look at. I mean, they say that 32% of home builders cut their prices last month. And the affordability is at a 39-year low. They're going to have to. I mean, it's just a matter of time till the vast majority of these home builders are cutting their prices, unless they're in an area that really didn't get affected by the bubble, which is they're going to be few and far between.
Yeah.
So yeah, that's a really good point, and
And
definitely
I
a
just,
warning sign.
and I think we're just in this like little like when on the Roadrunner cartoon, or was it Wile E. Coyote, when he would run off the cliff and he would kind of sit there for a second before he dropped.
Yes.
Does that make it feels like maybe we're there now, because I know some very successful real estate agents that are here, and one of them lives in my neighborhood. I see him walking by once a week, and they're telling me like the volume right now of transactions is like, for lack of a better way to describe it, a fraction of what it was like 18 months ago, 2 years ago. We're in this weird situation where prices have skyrocketed. Everybody thinks their house is worth twice as much as it was 3 years ago. But and I think this is an important point for us to touch on, everybody's trapped. Well, people with mortgages are trapped, right? Because if you bought a house 3 years ago with a 3% mortgage, right? You're sitting there now, and if your spouse is saying, "I want to buy a bigger house, we need more room, we need a bigger house," and you say, "Okay, let's go out and look for a new house," and your spouse says, "Well, our house has gone up in value by twice as much, let's go buy a bigger house," and you go look at a bigger house. Well, the value of that bigger house has also gone up significantly.
Oh yeah.
And if you look at the prospect of getting rid of your 3% mortgage and moving up to a bigger house at a bigger price at a higher rate, you can't do it. So people are trapped. People are trapped in, I mean, people with mortgages are, generally speaking, trapped where they are. So we're in this period where there's very little activity, and a very, what I would say, delicate balance right now between buyers and sellers, but that can change very quickly.
Oh yeah.
First Mining Gold is a development company advancing two of the largest gold projects in Canada. Springpole in Ontario and Duparquet, located in Quebec, each already has 5 million ounces of gold reserves, but exploration initiatives are underway at both projects to find even more gold. First Mining is well financed, has zero debt, and owns an interest in 4 additional Canadian gold development projects.
I love the comparison. Being in the air with your feet spinning, like, oh, what happened? I just ran off a cliff. And because
Yeah.
that really is a good way to look at it. You figure, if you're sitting on a 3% mortgage rate, you're thinking, well, I'm just going to try and weather the storm. Because the thing is I watch my housing market pretty closely, and what I've noticed, very similar to your market out there, there's not a lot going on. The loan representatives at my local credit union, they laid off half of them, just because there's nothing for them to do. And if you're sitting there on a 3% mortgage rate and you're looking around, well, okay, maybe I'll sell my house. And then you think, all right, well, I bought this in, early 2022. And the homes in my neighborhood that have sold recently, well, let me see. There's 8 homes on the market, only 2 of them have sold, and they've sold for less than what my home is worth. So if I sell my home right now, well, I'm going to take a loss. I only put 3% down on this home. I'm not going to be able to sell it for what I bought it for. I'm going to have to pay all the fees when I sell this thing. And then when I go to buy another home, I'm going to have to pay all those fees again. And so you'd feel really trapped. And it makes sense that people decide, well, I'm just going to weather this storm out. And hopefully in 5 or 6 years, I'll have paid down, the principal enough that I'm not underwater on this thing anymore. Because a lot of folks that bought at the peak, they're already underwater, whether they realize it or not. If they went to sell, they'd realize that they were. What I've noticed in my area is the homes that have been selling, the only ones that have been selling are the ones with big price cuts. And it's going to take a while for it to recalibrate, for the market to recalibrate and go, okay, so the true value in this area is actually 15% lower now than what we thought it was at, in October.
Yeah. And mortgage rates aren't going back to 3% anytime soon, most likely, right? I'm not offering financial advice. I'm sure Brian would say the same thing, but I would be very cautious about buying a new house right now. Could be wrong, but if it were me and I had the choice, I'd go with silver.
Absolutely. Yeah. And I'm not offering financial advice either. I would definitely go with silver. Getting into real estate right now would be very risky. You'd probably end up losing your butt. Even the Wall Street Journal recently had an article saying that, the Wall Street investors think that the housing market is overvalued. And it wouldn't surprise me if we start seeing some of these big investment groups like Invitation Homes, which happens to be 10% owned by BlackRock, offloading some of their inventory, especially in cities where they've kind of oversaturated the market. They're probably going to want to start getting some of these homes off of their plate, which will put additional downward pressure on the price of housing.
Yeah, I mean, people just can't afford it. I'll wrap up with this. I think it's Goldman Sachs puts out a housing affordability index, and it's been like the lowest in decades, right? I mean, people, if you just do the basic math, again, if I just look at my neighborhood, $500,000 for a house and at 7-8% interest rates, it just doesn't work. I mean, especially when you've got most Americans now are carrying credit card debt, auto debt, student loan debt, everything else on top of that. It's becoming a very, I feel like, precarious situation. We'll see if Wile E. Coyote, jumps back onto the cliff or if he does fall straight down. Mountain Bullion Entertainment. That's Brian's channel. If you want to hear more from Brian, go to the YouTube channel, Mountain Bullion Entertainment. Subscribe, please, okay? Because he puts out great information, great content. And in the comments section on one of his videos, tell him you're a basement dweller from Ron's Basement. He'll give you a special welcome.
That's correct. I absolutely will. And thank you very much, Ron, for having me. I really appreciate it. And I do look forward to speaking with you in the future.
Yeah, likewise. Have a great day. We'll see you soon, Brian.
Thanks, you too. Have a good one.
All right, buddy. That's a wrap. That's a wrap. I did it in both. Oh, no, I don't want to end. Hold on here. I don't want to hang up on you. Stop.